E-commerce was already trending before COVID-19 and truly took off during the lockdowns in 2020. According to McKinsey, e-commerce saw 10 years of growth in just 3 months. Netflix added 16 million subscribers in 5 months, while Disney doubled its subscribers to 50 million. A trend called home nesting will also likely remain, as millions of consumers have spent money building home gyms, improving their live streaming equipment, and investing in home entertainment. Working from home will also continue in some way, shape, or form. According to McKinsey, Zoom's user base grew from 10 million to 200 million in 3 months. Welcome back to a special edition of the Money Mind Exchange. We've been talking about the investment landscape for 2021, also the risks, and now we're going to look at the way forward for the year. Vasu, I'd like to begin with you. Taking into account all of the changes that we've seen in our behavior, in global consumption, and also to the point of the acceleration of megatrends that we've seen that have sort of sprouted out of this pandemic, where should investors be parking their money?
Well, I think we believe in diversification, right? Not just focusing on one or two trends, but clearly one trend that you cannot ignore is the digital transformation of the global economy. In other words, the tech space, right? And that's going to change the way we live our lives. It's going to change the way businesses operate in the next, not just 5-10 years, but the next 20-30 years. Now, technology stocks have taken a backseat so far, but they could make a comeback, as I said, going forward. And it's something that you need to have some money in. Of course, don't over-invest in it. And when you talk about technology, it's very broad. It's not just about e-commerce, but it's also about the systems that support e-commerce, right? So cloud, cybersecurity, networking, even the telecommunication operators, they will benefit because of the greater usage of broadband, 4G, 5G, working from home. So this is something that's going to persist for the next 10 to 20 years. It's a game changer.
So, James, when you look at ESG and you look at what's driving investment in that sphere, what are the opportunities that stand out for you?
Well, I think it's very important in this pandemic that has illustrated that companies have to use ESG as qualitative factors to analyze the companies, because it actually improves the risk, because companies that are well managed tend to have good ESG ratings. And I think the stock markets recognize that, especially during the pandemic. The question is, over the long term and into the future, will this persist? And we think, yes, it will, because we are going to live in a much more uncertain environment. There's going to be difficulties associated with how supply chains will operate, even in terms of even climate change, etc. So you need companies that are very well managed, that scores highly on these ESG factors to thrive and adapt in a new world.
Do you think, Angela, that this whole idea of business resilience has changed? This idea about risk management has changed as a result of this pandemic?
Absolutely. I think risk management has gone from, some companies I'll say had the old risk register stuck in a dusty binder on some shelf. That has completely changed. It's all about how to use data sets, internal and external, to get real-time feeds of what the risks really are, and then an active conversation with executive management on what we're going to tackle and when. Again, this kind of real-time, data-led approach to risk management, and that's not going to go away.
So before we close this session, everyone, I'd like to get your final thoughts on the best strategies for investors, for businesses for 2021. Vasu, I'll begin with you. What is your investment strategy, your best advice for the next 6 months?
I would say the easy money has been made, but there's still money to be made, so stay invested. And where we like in terms of the investment space, in terms of asset classes, is still equities. We are still overweight on the equity markets, but while the equity markets may hit higher, be ready for more volatility. So it's something that you can't run away from. As I said earlier, don't ignore the technology sector. But at the same time, as the economies reopen, you're going to see opportunities in reopening place. So the old economy stocks, perhaps like financial services, materials, energy, commodities, they will come back. Real estate as well, will benefit from higher inflation. So all that will present opportunities.
James, your
asset and portfolio allocation for the next 6 months?
Well, I think at this stage there's going to be much more volatility. There's still going to be equity upside, but probably lesser than before. But I think investors should still stay overweight in equities. And I think the markets that we like continue to be markets with strong growth, such as the US, China, even Singapore. And of course, you have to build income into your portfolios, and therefore I think you have to look for yield. And of course, Asian bonds is one place you could get that yield from. But I think it's also very important for investors to step back and look at longer term trends, such as the digital revolution or the sustainability revolution, to get that whole position for those long term mega trends that will do very well in the years ahead.
And Angela, your best advice on what perhaps is best described as this necessity for a reboot of risk management that's been brought on by COVID-19?
Yeah, well, one of our top 5 risks this year was don't miss the rebound. So it sounds counterintuitive coming from me working in the risk management space, but have your risk management in place, but then go for it. Do not stand at the sidelines. Do not worry too much about the risk. Just be able to identify it and manage it, but then go after all these sectors we're discussing, because we have this really unique opportunity for a rebound that investors do not want to miss.